Earlier this week, I had the opportunity to speak with Gary Gordon, a retired stock analyst that's covered housing, mortgage, and consumer finance industries. He's also served as a U.S. investment strategist as well as a portfolio manager. He now spends his days as a college professor as well as helping teach economics and math through a New York prison education program. I originally found Gary Gordon because he put out a Seeking Alpha article called Sell SoFi Technologies Because of Macro Demand and Supply Challenges. This article was posted on January 16th, 2024, when SoFi's stock price was at $7.53 as of the time of the article's publication. Gary is very upfront about the idea that he has zero opinions about SoFi's technology platform, along with real beliefs that digital financial services platforms don't have any real differentiating factors aside from price, SoFi included. We did, however, discuss management, guidances, fintech in general, gap profitability, growth stocks, and personal stock experiences. Although he has a strong sell rating on this company and I would have a strong buy rating on this company, Gary and I put aside our differences to talk and have a friendly conversation purely for your viewer enjoyment and to learn from different perspectives. Please enjoy the conversation. Gary Gordon, thank you
Yes.
for coming on the show. I really do appreciate it.
Okay, my pleasure.
You wrote an article on Seeking Alpha called Sell SoFi Technologies Because of Macro Demand and Supply Challenges, a strong sell.
Mm-hmm.
Now, many people on the channel would know me as probably being more of a strong buy side, being very favorable for the company. It's one of my largest positions.
Mm-hmm.
I'd love to know your perspective, what you see in this company, and potentially what are some of the problems that you foresee into the future.
Okay, so my article, I would never, ever say was a complete discussion of SoFi.
Gotcha.
I did this professionally. The article I wrote here would have been 1/4 of a full article. Because I didn't forecast earnings,
Sure.
which I normally do for a company. I really didn't drill into the numbers. So there's their tech subsidiaries. I know very little about it. The company has almost no descriptions of it, which was sort of disappointing. I tried to find something.
Yeah.
I couldn't really find anything. So this is a partial story, but I always start every story, and I think that's absolutely critical if you're looking at a stock to think through what the demand is for the products that this company is offering, and then the supply or competition. What competition are they facing?
Sure.
And companies don't exist in isolation. They live in the real world of demand for their product and competition. And I thought, from what I typically see, honestly, today in most analysis, is that's been ignored. It's been looked at as a separate entity that controls its own fate. And I don't think that's true.
Yeah, no, fair point. I think you had brought up, especially on the deposit side, which I think is a strong place to start, that SoFi is going up against the largest competitors in the world. JP Morgan, Capital One, Bank of America, all of the largest players are trying to get after consumer deposits. And so is SoFi.
Mm-hmm.
You use this as a more of a downside. The way that I look at it is, although they're not living in isolation, they have been growing quarter over quarter, and in fact, has taken quite a large amount of market share in the small amount of time that they've actually been accepting deposits.
Mm-hmm.
How do you see
Okay.
that market share gain?
Okay, so two things. So let me back up. If I look at the growth in deposits, so what is the demand story? Deposits, I put in my article, I came up with maybe a 5 or 6% growth rate over the last
Right.
20 years. We're in a very unusual period now because after COVID, a lot those COVID checks by and large went into the bank. So the banks got something like $4 to $5 trillion of deposits in a year and a half. And now those deposits are being spent down. So as we speak, deposits are shrinking in the United States.
Sure.
So as we speak, we've got a declining growth rate for their product. Two, as you said, competition is fierce, and I read New York Community Bank, which reported disastrous results. I read their transcript. We're focusing on deposit growth.
Yeah.
Another company I recommended earlier in the year, Zions Bank. We're dropping any business where we don't get access to deposits.
Right.
So, and then you've got other startups, other fintechs, which are aggressively going after deposits. So the competition is fierce. So the obvious question to me then, if I've got a slow growth, or actually as we speak, a negative growth product with plenty of competition, how can I take market share?
Yeah. Yeah.
In financial services, I learned over time, it's incredibly easy to take market share. It's not a challenge. I've got to do one of two things. On the deposit side, I can only do one thing, which is to pay a lot. If
Right.
I pay more than my peers, I'm going to get deposits. I saw a TV ad for SoFi in the last few days. We're paying 4.6% plus cash bonuses, which they
Right.
didn't describe online. Sure, if I pay, as we speak, SoFi's deposit costs are a little over 4%. The average branch bank is paying 2%.
Right. Right.
Zions Bank has $26 billion of zero cost deposits. SoFi has probably, if it's not zero, it rounds to zero. So,
Do you
yes,
think
I can grow deposits all I want if I pay more than competitors.
I think the thing that I would like to counter with that, because I'm seeing SoFi grow in deposits, and it's not like other large institutions are not offering similar rates. You look at Capital One, which you even referenced in your
Right.
article. In the last quarter, they grew deposits for, from what I can see here on Seeking Alpha, $2.4 billion quarter over quarter. Right, they're offering 4.35%, I think, in their high
Four,
interest savings accounts.
4.6 was SoFi. Oh, you were talking about Capital One?
Yeah, Capital One, right?
Okay.
I think Lending Club, even smaller fintech, is
Mhm.
offering an even higher rate. Ally is offering a higher rate,
Right.
yet they're not growing deposits as fast as SoFi.
Yeah. They're starting from a lower base, but yeah.
Ally's starting from a lower base.
No, SoFi is starting from a lower base.
Right, right. But I mean, in
Yeah.
absolute dollars, they're growing.
Ally will have some deposits that they got in during the COVID
Right.
deposit bubble. Some of those people are spending down their deposits. SoFi is brand new; they don't have that kind of issue.
Sure.
So, and then the other problem is, what's the alternative? How are they growing? I mean, what's the explanation for their sharp growth if it's not price?
Well, and this is sort of one that's hard to put into real metrics, but I think there's a product differentiation that whenever they offer things like, um, 2-day early paychecks. So whenever
Mhm.
you get paid, that SoFi will front you the money earlier.
Mhm.
Well, that's hard to put in any sort of real metric on their side, but I think from a consumer perspective, that might be more attractive than even a potential higher rate from another consumer or from
Could be, but
another institution.
it costs you money. For a bank, they're losing 2 days of deposits. That's why banks delay you 2 days, is they earn more money on it. So it's an effective price in addition to the yield.
So what? So then let's just go straight to margins then. Whenever we're talking about SoFi gaining market share and potentially losing margins in the meantime, they
Mhm.
are saving it on potentially owning their own banking infrastructure, potentially from being a digital only institution, from
Mhm.
not having dividends to pay out, no payout ratios. Do you think that where a lot of the large banks are end up, taking that high margin, they're just giving it away to shareholders rather than, end up giving it back to their consumers for better products?
Well, one, I hope for your sake as a owner of SoFi that SoFi does give it back to you as dividends someday. That's why you own this. If I bought the stock just so it would grow with no earnings for the next 20 years, I'd be happy to give you those shares. And
Yeah,
so they
yeah,
better earn you money
yeah.
over the long run. So I wouldn't consider that a benefit. Um,
I think it's more of a benefit in terms of market share gain, right?
it
Like
could,
what Jeff
yes,
Bezos said, your margin is my
yes.
opportunity.
Well, we maybe have to go back to fundamentals here, but if you bought a small business, why would you start up a small business? You'd start a restaurant. Why would you own a restaurant? if I grew my restaurant for 20 years, I took more and more market share. I opened up multiple, and I never made a dime for 20 years. Would you
Yeah.
be happy about that?
But it's not about not making a dime, right? SoFi just posted their first gap net income positive
Yes.
quarter.
Okay,
What did you
good.
think about them
Yes.
beating expectations on top line, bottom line, net
Yes.
income?
Well, I will guarantee I'll be wrong if this continues and they continue to grow earnings at a steady pace. For me, I mean their competitors, the companies they're going to look like if they succeed, are the big banks. They sell
Right.
at about a 10 multiple. So if the stock is, let's say, 8 today, SoFi, they got to get to 80 cents to justify their. Now, I'm sure investors are thinking far greater than that. If that's the case, then the stock will be a lot higher than 8, but
Right.
it's got to come out in earnings. Market share is, especially for financial service companies, growing market share is absolutely not a forecaster of future earnings. And I would argue, and I argue in my piece, is very often a forecaster of bankruptcy.
So yeah, I think that's where I'm not going to be able to change your mind, and I don't think you'll be able to change mine. But I look at SoFi, and maybe this is from a very young perspective. Maybe I have a lot to learn, but um, that this is not to be looked at as just a bank. That um, there is great aspects of them growing market share, and that the same way that Amazon disrupted retail, I believe that SoFi will do to financial services. Um, and in your quote, or in the article, you quoted Anthony Noto saying that um, they want to be the winner in financial services.
Right.
I think you did a little bit of a misquote on Anthony Noto there, because that's not the quote that he said. He said that they want to be the winner that takes most in financial services, which today would be JP Morgan, presumably. But um, with these new fintechs, you talk about them, sort of digging themselves in large holes, but isn't that what all growth companies do? So then they can eventually make larger profits into the future. Like, do you think that SoFi losing all of all of that money for the first 10 years is actually that large of a problem versus the actual customers that they have today, nearly 10 million?
Well, if those are customers are ultimately going to generate large profits, then I would be wrong.
So they said
I'm
that they're going to be gap profitable going forward from now on. What do you
okay.
think about that? And did you take a look at
Well,
their Q4, by the way? Can we talk about that?
yes, I did look at it, not in great detail. That's not my argument. Is I'm going to parse the one quarter's numbers.
Sure.
Um, so I'm losing track here a little. Your question was again.
Well, just I guess I have so many because
Well,
I found it
give me
hard to
give me
do
the
it.
next one, and we'll go on from there.
Let's go on. So one of the things that I saw in your article, you were talking about certain industries that were not growing at large rates, right? You even
Mhm,
pointed to student loans as
mhm.
being one that is actually in a very
Shrinking already.
declining rate
Yeah.
right now. But yet SoFi continues to put up large rate of growth in their student loan business.
Yeah. Okay. Again, this it's fascinating to me because I'm old. I've seen a lot. This idea of growth is everything is
Right.
honestly a fairly new business idea.
Mhm.
I would maybe call it the Amazon effect.
Right.
That growth is everything, and growth will magically lead to great things.
Yeah.
Again, to do that in a mature business where it's hard to figure out what a competitive advantage is difficult. And the history of financial services is that the way companies take market share, and they're not the first, is they either undercharge for their product, or when we get to the lending side, they use weaker lending standards.
Mhm.
Over and
Do you think
over,
that
that's the
SoFi
case.
uses weaker lending standards?
I can't honestly can't prove that. And we haven't really seen their challenges yet. We've over the last 5 years, outside of a couple of months for COVID, it's been a pretty strong economy. And actually, those COVID checks created record low loss rates for consumer loans
Sure.
for a couple of years. So they really haven't been tested yet, in my mind.
Can I rebuke that a little bit? I would just say that SoFi, whenever they first started in 2013 up until practically 2019, they were a student loan lending business.
Right.
Then the Trump administration completely took that away
Right.
because there was no need for SoFi or really any student to need to refinance their student loans. And then they completely pivoted off of student loans to go towards personal loans, financial services,
Hmm.
acquiring a technology platform, all within those couple of years
Right.
since 2019. Do you not think that that's a pretty hard challenge that potentially SoFi's management had overcome?
If I got the capital, I can grow.
Right.
Um, Honestly, no. And again, I've in my article, I've got a number of historical examples of companies and whole groups of companies that did this similar things, grew very, very rapidly in short periods of time,
Yeah.
and all of them went bankrupt.
Well, I would state against that the what investors are focused on growth is because all the largest companies in the world now in the S&P 500 are all growth companies. Apple, Amazon, Facebook, all of these
That's
companies did
that's
the same
the
idea of lowering margins and taking market share.
and they've got differentiating features. I would say that if I'm Google now, I can keep growing rapidly because I've got a oligopoly on a product.
But you don't think that SoFi could get there?
Not a prayer, not in financial services. Well, just the if you look at SoFi itself, they're spending a lot on technology, and
Mhm.
obviously any company today, if they're going to talk about their growth, it's based on technology.
Right.
Do you honestly think that J.P. Morgan has never heard of artificial intelligence?
No, no.
Capital One doesn't have a technology budget.
Right.
That hundreds of banks aren't, and bank consulting firms aren't offering the same thing.
Right.
That somehow I've got to believe that SoFi has figured out, technological wizardry or customer service management that none of these companies are thinking about. I put in some quotes there from those companies about how they're spending. They're
Yeah.
spending multiple amounts of what SoFi is spending to somehow assume. And this, I see this in other Upstart is another company I took a look at a few years ago. Same thing. You could not read a sentence that Upstart uh, put out there that didn't talk about how great their technology was.
Right. Right.
Brilliant technology. Somehow they figured out something that nobody else is going to be able to figure out. I went online actually to apply for an Upstart loan, and I can give you the anecdote if you'd like. But they, to me, clearly didn't know anything better than anybody else.
So I guess
So you've really got to believe. If I just listen to the company, if I just read SoFi's documents, I'm going to
yeah.
be overwhelmed. They're doing all these great things. He keeps telling you all the magical things they're going to do. If I just invested by believing management, I'm telling you, I've had a long history of this. That doesn't work.
Well, what
Trust
about
it.
so I don't think it's just on a hope and a prayer. I think mainly people are excited on the fact that they've guided for a certain level of performance and have beaten that guidance every single quarter since they've been a public company.
Okay.
So on both top and bottom line. And so um I think that that's more why people have a belief in Anthony Noto and management is because they say one thing and they always surprise to the upside.
Well, they always have so far.
Yeah, yeah,
Does
exactly.
that mean they're going to do it forever? I don't know. Let's really test this. And I'm not expecting, to the this story to be ended in 3 months.
Sure.
Let's give it 2, 3 years and
Um,
see there. Let's see what happens when they to their personal loan credit quality when we've got a weaker economy. Let's see the impact of rapidly growing those deposits at the highest rates. We'll
what
find out.
about
Let's see where they're
management's
going to put all that money, that all those deposits that they're growing.
Well, they could just put
Um,
it in treasuries.
well, then they'd be losing money.
Well, at 4%, you can get 5% right now. I mean,
No, you not on a treasury. You can't. And they're paying. They're not paying 4. They're paying 4.6 plus a cash bonus is their
well,
advertisement.
that it's 4.6 for direct deposit. I think their average deposit is actually less than 4%. I think right now it's 3.8%.
It's a little over 4. It was in the fourth quarter. It was either
Okay.
4 or a little over.
Um, I don't have those numbers yet because the 10Q hasn't released as
Yeah.
of the time.
So if I took 4% and they have some operating expenses,
Mhm.
so let's say it's 4.25, 4.3.
Yeah,
They buy a 1-year treasury. They're earning 0.
but that's not a liability. And then you can put that
Okay,
towards their personal loans.
that's
And
I'm not buying their stock if they've got a business that generates 0.
well, no, but I'm saying you can get a personal loan, get a 14% coupon, 4% default rate, and there you go. You're making a pretty great margin there.
If the default rate stays at 4%. This
Right.
morning, I'd be happy to forward you the ad I got this morning, my email from American Express. Let us consolidate your debt.
Yeah.
American Express, Upstart. We got loads of Discover. If this is a great business, I guarantee there's not going to be a hole for long.
Well,
Um,
but this is what I mean, though. I mean, there's a lot of companies that can say that they're going to crush SoFi, but for the longest time, um, they've continuously taken market share, and not only that, taken it at higher and higher margins.
well, the
So,
personal loan business is how old? 3 years old?
right.
That's not the longest time. Trust me. Again, I'll give you one example. Happy to give you more. A company called Next Card,
Yeah.
late 1990s. I
Yeah.
guarantee you've never heard of it. So I was following the credit card industry at the time, and they had just gone public. I went to visit them, and they said, we've figured out this underwriting for credit cards. We
Mm.
figured out a way to. There's the early days of the internet. We figured out how to market on the internet, um, and gain accounts.
But that was
And
for subprime borrowers, was it not?
they said they were a credit card company at the time. They were a
Okay.
regular credit card company. Um, and So I checked with two of the big credit card companies, the competitors at the time, and they said, and again, this was all brand new at the time. The
Yeah.
internet. I said, what's your experience so far with internet marketing? Have you tested? And they said, yes, we have. And at the time, they said the loss rate on those was 4 times what it was on accounts they got through the mail.
Right. Right.
I those days, as a Wall Street analyst, you were allowed to short stocks.
Hmm.
I shorted Next Card. Next thing I knew, Amazon took a 10% interest in Next Card.
Gotcha.
Stock doubled.
Yeah.
I shorted some more, and probably it was 2 years later they went bankrupt.
Would you
Growing
short
like
SoFi
crazy,
Technologies?
growing like crazy for 2, 3 years.
Would you short SoFi Technologies?
Honestly, it doesn't look dramatically expensive to me today, so
Gotcha.
I wouldn't short it. I wouldn't buy it, but if it
What
hit
What about
12 or
management's
15, knowing no more than I know today, hit 12 or 15, I'd certainly short it.
What about management's expectations that they're going to get to potentially 80 cents in EPS by 2026?
If they do, that's terrific.
Right.
And I've missed something.
Right.
I would I would be cautious about believing that. Yeah.
What
Again,
about the
to
idea that
believe
they've got?
management is tremendously, in my opinion, tremendously naive. Always check. Always double check. As Ronald
So,
Reagan said, trust but verify. Management can say anything. I can show there's a whole list of companies who have said all sorts of things that
mhm.
never occurred.
I think here, bear with me a moment. Can you see the screen?
Yep.
So this is each quarter that SoFi has been reporting on their revenue expectations
Mm-hmm.
versus what they actually shown off. These are in the millions.
Right.
Um, the number beats that they've done, and then the percentages that they've beat by.
Mm-hmm.
And then same thing for adjusted EBITDA targets and how much
Yeah.
they'd actually beaten by.
Right.
Um, I have no reason to believe that what SoFi is telling me is in fact the like. At some point, you got to believe someone, right? like,
No, no,
uh,
I don't.
and
Uh,
so
that's that's a strong belief I have. Don't believe anybody. Verify. See if
right,
it makes common sense. Just because somebody's beaten and the history you showed was 3 years,
yeah.
this is versus their expectation. Yes, okay. Let's see if they can, firmly find their place, profitable place in the business, and we'll see. But
But you could be
I
risking a
don't
lot of
invest by
upside.
believing. I don't believe anybody.
But you could be risking a lot of upside by not getting in earlier, correct?
I'm sure you could.
Right. But more
Um,
playing it more on the conservative side.
yeah, I could also lose a lot of money trying to get in early.
Sure. Sure.
I had just a quick. This is all documented in Seeking Alpha, but um, one of the another growth company, magical company, is a Redfin, which is a
Mhm.
real estate broker.
Yeah.
So I took a look at the company at 30 and said this stock is worth 10 at best.
Hmm.
I said to short it. Next stop was 100. So far I'm extraordinarily wrong. Today it's 8.
Right. Right.
Zillow, same thing. So I shorted it. I can't remember exactly now, 50 or 60, went to 200 is actually now it's probably about 50 again
Right.
after going to 30. Um, uh, what you call Open Door,
Hmm.
$15 stock. It's
All
going
those
to get
companies
in
kind of
early.
fall
Now it's 3.
into the
All of them
same
have
macro problem though, right?
all of them. They all have macro problems, and I would argue that SoFi has a macro problem.
Right. Do you think that potentially all four of those stocks could turn around in a better, lower interest rate environment?
I don't think their issue is lower interest rates. Um, they're in, as I argue with SoFi, they're in competitive, slow growing competitive businesses. It's
Right.
very hard to distinguish yourself. And if your goal is growth over profitability, you risk doing very stupid things.
Sure. I want to show you another chart. This is more specifically on SoFi. I'm not going to speak
Hmm.
on, Redfin's behalf, but
Sure.
let me just share my screen really quick. So in the 2021 times, SoFi was bringing a net income of as low as, or as low in a margin of negative 90%.
Hmm.
Uh, this quarter just broke out to be the first positive quarter at 7.8%. And
Hmm.
each one of their margins from their each segment contribution margin and adjusted EBITDA margin has gone one direction,
Hmm.
up and to the right
Right.
in a hard macro environment. Uh, are these not positive signs to you that potentially, um, as rates sort of turn around and, consumers might be actually looking for more of banking side products rather than short-term treasuries, these sorts of things, that there could be a large amount of flood into SoFi's products, like their invest product, for example? Do you think that, like other banks, that there could be a potential benefit getting out of this bad macro environment?
Again, their invest product. Is there anywhere else you could invest outside of SoFi?
Yeah, absolutely. I think it's a matter of a mix of where you're banking may actually be where you want to also invest. And
Well,
whenever you're gaining new
this is
customers
not.
at 2 point something million a year, you
Uh,
know,
this is another thing that I've seen a number of companies try to pitch this. We've got the core product that the customer wants, and we're going to cross sell them 500 other products.
right?
One, this is so far from a new idea. Wells Fargo is always a bank that pushed some. They used to all their quarterly
Yeah,
earnings tell you how many products each one of their customers had.
yeah,
Cross selling has been around for a long time. Every bank tries to do it, and all these new fintechs magically they say we've got some product that's going to create and some system, which SoFi has a very pretty picture uh, that we're going to cross sell everybody everything.
Yeah.
One, history says that it doesn't work. We don't, that's not what we do. I pick Schwab for this, and I pick, TD Bank for this, and I pick somebody else for that, depending on, and, maybe who I know, or, what they're specifically offering. So that's certainly no guarantee. Does
I think
SoFi argue that they're going to do it? They could. Could they show numbers for a while? Yes, if they pay a lot of money, if they charge nothing for my trades and they pay me 4.5% of my deposits, maybe I'm using both.
yeah,
I'm not
yeah.
making any money.
But they are making money.
They just made money once.
Yeah.
Two, we've got the issue of the credit cycle. You talked about interest rates as the change. The big issue I'd say the core of SoFi's earnings at present. I don't know that, again, the tech business, I'm not sure. They don't say if it's profitable or not that I've seen,
Yeah.
but probably the personal loan portfolio is probably their profit generator now.
Mhm.
That's unsecured consumer credit.
Right.
People are paying 14% interest. If you're think it through this. If I'm a 750 FICO score and I'm taking out a 14% loan,
Yeah.
doesn't something seem odd in there?
So what are you saying, that potentially the applications for SoFi are fraudulent, or are you saying that the numbers
I
that
would
SoFi are
I would
putting out are not
say
correct?
typically there could be, and I can't prove it. I would say the positive argument for that is they're dealing with people, maybe I don't know what, let's say a 30-year-old today who ran up student loan debt and then starting out took on some credit card debt. He's got a
Sure.
good job, but so
I
SoFi
would
can
say
offer
that's
them
the exact demographic. Yeah.
right. So maybe a 14% loan looks good compared to the credit card debt.
Right.
If that's a sweet spot, how big of a sweet spot is that? Can they
Mhm.
turn this into a $100 billion portfolio? I'd be stunned. I don't think there's that many. And
Yeah.
if it's $100 billion product, as I said, I just got an email from American Express. SoFi is not going to be a loan, and that product will be yielding 12% in two
Right.
years, not 14. Um, Two, we've been in a period basically of full employment since
Mhm.
they started their personal lending. That's not a serious test.
Right.
A serious test is with the unemployment rate's 5-6%.
Yeah. So,
And
I
if
mean,
that
they did
happens in
guide for that.
2027, maybe they hit 80 cents in 2026, and now they're minus a buck and a half in 27. We'll see what happens.
I mean,
So I
they did
would like,
guide
if I to
for
feel comfortable with that portfolio, I have to see it tested.
they did guide for that in 2024 though.
Guiding
5% unemployment.
guiding is irrelevant to me.
Uh,
Honestly, do yourself a favor. Don't
yeah.
just take companies' guidance. Very,
No,
very dangerous. I
I
used
take
to,
companies' guidance whenever they've only beaten, you know?
yeah. Well, I
Um,
I remember I was following the home building industry,
right.
and I was talking to the CEO of a home builder, and we went through the whole interview. And the end of it, he says, "How come you didn't ask me for my housing forecast?"
Yeah.
And I said, "Because I don't think you know any better than anybody else. We'll find out." That's the case. Company guidance to me is almost worthless. If they're talking about their expenses, something they can control, but he doesn't control the unemployment rate.
But
He
so
doesn't
far
control interest rates.
but so far they've been very conservative, right?
I assume so. I mean, they're playing a game. They want to make now one of the issues in the stock is we beat our numbers every quarter.
Yeah. Yeah.
Again, I follow lots of companies who would lowball. I remember getting calls from companies. Your
Mhm.
earnings estimate's too high.
Right.
Why? Because they wanted to make sure that they can beat the number. If I got the number right, they wanted to beat the number. I
But
mean, I'm
but
not
it's also
accusing
just about the
SoFi of
sheer
this, but I will accuse other companies. There's plenty of accounting tricks that could be played, or accounting definitions.
Yeah.
Does anybody know what EBIT means? Does EBIT make sense for a financial company? I don't
Yeah.
think anybody knows, but they use that figure. What's the matter with the gap number at the bottom? Why do I have to invent a new profit number?
I think because I think a gap number did not, at least this is the way that I would think of it, is that that did not completely show their individual unit economics. And so they wanted to strip out their stock-based compensation, depreciation, amortization, and show how the company is growing before they get to that point. Now that they are gap profitable, I think they'll lean much more on the gap side, but they
Yeah,
needed to show
I would hope so.
users, because I think if a fundamental difference between you and I is that I do think that companies go through a growth phase of high expenses and low profits to gain market share. That I don't think that a company starting out should be profitable. I think that that's a waste of time. And so, like, I don't know. I find there's a bunch of fundamental differences. So you brought up Wells Fargo being wanting to be a cross selling giant. The way that I see Wells Fargo is that, NPS scores for Wells Fargo are a 4, some of the
Hmm.
lowest in all of banking. SoFi has one of the highest in all of banking in America at a 90, at a
Hmm.
90 NPS score. And so whenever people are so satisfied by a product at SoFi, like their SoFi checking and savings, I believe that cross sell would be a much higher opportunity because people were satisfied with their options. And that's not management
Hmm.
saying that. That's
Hmm.
consumer reports that are saying that.
Right. Well, again, I'm always skeptical, so that's a problem I have. But why would I be? Why would I be? How would I rate my bank that I put my deposits in? I mean,
I
do you hang out with your banker a lot? Sitting down and discussing the world with them.
I think it
If I'm
would.
getting a high interest rate, most people your age never even go into a bank. How do I feel good about a bank? They pay me a high interest rate. I don't have any screw ups. I love them.
I don't think everyone gets treated as nicely from a bank as potentially you do. I think the very affluent members get treated very well. I think that on the lower end, people are seeing overdraft fees, account fees, maintenance
Right,
fees, service fees. The bill just racks up and up and up, and they don't
right.
know why it's happening to them. They get a bad feeling about their bank because they can charge those rates because there's not another player that's offering a better service. Now you
Okay,
have someone coming into the space saying, hey, we're not going to charge any of that stuff. We're going to keep it as pure as it is. You want this high interest rate, there's no strings attached. That,
okay,
that is a better taste in people's mouth.
okay. Can I make money off that product? I don't charge the fees. I pay a high interest rate.
Right.
Where do I make my money?
But they are.
That'll be my question. They they did once,
Well,
and I would say they haven't been tested. Give it. I can again all the list of companies I showed in my report that ended up bankrupt. There were many years where they made a ton of money.
right. Yeah.
I look. There was 9 of the 10 top mortgage lenders in 2006 went bankrupt
In 2008.
by 2008 or nine.
Yeah.
Yes, they were all growing. They were all taking market share.
Yep.
They went bankrupt.
No, I think that
And
that
they were
could be on
very
the table.
profitable in 2005 and 2006. Then they got tested. I can't. I would not say I definitely could be wrong on SoFi. You could be right. So, but I would say I wouldn't say that you're right until they've been tested. To me, a test would be let's see how they do in a what I would since personal lending to me is the key. Let's see how they do in a tougher economic environment. If they get through it, God bless them. They've figured out something that I didn't see,
Right.
and I'm wrong. But I'd be very nervous until then, and I certainly wouldn't assume that I found the geniuses that are going to be the next Amazon.
Yeah. I mean, I think that in every young company, you kind of have to take that a little bit of leap of faith because things are not proven out. You don't have that 10-year track history
Nope.
or track record to
Hmm.
see. So I think that there's a definite. It's definitely a speculative position, But I think
Right.
where you can find those speculative positions might also lead to higher rewards, right?
I've got dozens or hundreds of speculative companies out there.
Right.
So
Um,
I'll leave it to others than me to figure out the speculative
yeah, fair point.
miracles.
Fair point. I wanted to ask because you said that SoFi hasn't been tested in a hard macro. What do you see going forward 2024, 2025? Are you more in the camp of potential hard landing here from the Fed? Like what are you seeing that potentially SoFi could be enduring in the next couple of years?
Well, this is, so I've been doing this a long time. This is an extremely tough time to forecast the economy.
Sure.
Um, because of my history of covering consumer lenders, I got an appreciation for the role of debt in the economy. And it's extremely important. If you just, I mean, getting down to the micro level, your spending power is a sum of two numbers: how much you earn and how much you can borrow.
Sure.
You can throw in savings there, borrow minus save, but we'll put savings aside. So if you and I both make 50,000, you borrow 10, I borrow 0, you're spending 60. You're spending more than me, you've got more stuff than me. If the next year your lender says, no, I'm leaving you at 10, we're both spending 50. So it very much depends on and if you look at the history of the economic growth over time, it goes up and down with lending. That's the big swing item in the economy. I think it's an underappreciated fact. Historically, the lending was private sector. Companies like SoFi, mortgage companies, banks doing commercial lending did the bulk of the lending. That's no longer true. The federal government is now extremely active as a borrower.
Sure.
And so they're creating. So this year we're approaching $2 trillion of debt. Why is the economy doing so well? The government's borrowing $2 trillion and giving it to us
Right.
to spend. I felt comfortable. I could predict private sector debt cycles. Actually, I wrote a book about it. The concept that understanding that private sector debt cycle is important. It's not nearly as important today. Now it's a government debt cycle, and I don't know how you predict that.
Right. Right.
There's, Democrats don't seem worried about it. The Republicans didn't either, but they talk a little about, if Trump is elected and, 2025, he just says, we need more fiscal discipline and we're rolling it back to 1 trillion of debt versus 2, we'll be in a recession.
So
Guaranteed. I don't know, but I can't predict that. So I'm very uncomfortable predicting.
yeah, no, that's perfectly fine. If I'm allowed to ask, however,
Yeah.
what are you doing with your own portfolio? Are you long on the U.S. economy? Where are you putting your money?
I don't make economic bets like that. Actually, I would say 2/3 of my money is invested by others. I do realize I've I've got my limitations as an investor.
Sure.
Um, I know the area that I used to cover. I know nothing about tech or healthcare or manufacturing. So I give money to others to basically invest in those areas. My investments have been largely my old stocks that I used to cover, and I've been very positive on the housing cycle. So most of the money I invest is in housing related stocks. And I've written this up on Seeking Alpha, so I'll mention a few.
Yeah.
There's companies called mortgage insurance companies. If you buy a home with a low down payment, you're from Canada, right?
Yeah. I am.
So I don't know if they have that in Canada, but in the U.S., if you put down less than 20% to buy a house, you've got to buy insurance to
Yep.
protect the lender.
Hmm.
So you lose money, you get insurance premiums, and you have to pay out if there's a default.
Yeah.
I saw won't bore you with the details. I just published a story on Magic a few days ago, but there's been extremely low defaults, and I think that's going to continue. So I own
Right.
these MGIC, a company reporting tonight called Radian National Mortgage Insurance. I own another little company nobody ever heard of called Farmer Mac, which lends
Okay.
money to farmers.
Yeah.
It's been a big winner of mine. I still own a fair amount of that. I owned banks for a while when you hit the banking crisis in the spring. I bought a couple of banks. I've sold probably half it, but net, I've been a seller, not a buyer in the last
Gotcha.
3, 4 months.
Well, I appreciate that, Gary. So I'll leave your links down in the description down below so people can read your Seeking Alpha articles. But is there any last things that you'd like to say before we go?
I'd say nothing specifically, but um, maybe I can pass along. I used to put this on as a quote when I was still writing a Karl Marx quote:
Hmm,
"Doubt everything."
sure.
So be very careful. That's one thing I guess I would underscore. Be very careful about trusting management.
What?
Even if they've had I hear their track record, they've got their own incentives. They don't control their full fate. In fact, they control a lot less of their fate,
Yep.
their fate than they'd probably like to believe. We like charismatic CEOs who tell us they're going to conquer the world. Maybe they're right, but constantly question them. Look for other sources of information.
Appreciate that, Gary. I actually forgot to ask you one question.
Sure.
What was your just single thoughts about SoFi's Q4 earnings whenever you reviewed them? Were you pleasantly surprised, or what
Well,
do you think?
like you said, they basically forecasted it, so I would say it was sort of neutral.
Gotcha.
The things of interest to me, I guess, where they said they weren't growing their personal loan portfolio,
Mm,
which did strike me as a good idea.
yeah, yeah.
So that was
Just in case
impressive.
there's
So
a
yeah, the deposit business, I don't see as a particularly profitable business. I don't think it is for Ally. I don't think any online bank is really makes a lot of money off of that.
mm,
Um, the one I don't know anything about, wish I did, the tech um, financial database business.
yeah,
If
yeah,
I've
yeah.
even got that right? That would be the interesting one I'd love to know about.
Right, right.
So I
Well,
would so I would say it was this fourth quarter was, I guess, okay.
yeah, yeah. Okay, I really do appreciate it, Gary. Thank you so much for coming on.
Okay,
But
my pleasure. Thanks for asking me.